Welcome to Trade Pro. In this video, I have a very important market lesson. This is going to be more of a freestyle video where I let you guys get into my head and talk about the relationship between market structure and indicators and how to use that relationship in a very specific way to give you an advantage, give you an edge in the market, and allow you to stay consistent and profitable with your trading. So I think this will really help a lot of people out there, even traders who have been in the game for years who are still struggling. Kind of getting this down, if you haven't already, is extremely important, and thinking about market structure and the relationship between market structure and indicators in this specific way can really take you to the next level and kind of bridge that gap if you're struggling to be profitable. So let's get into things here. This is, as I said, kind of a freestyle video, so bear with me. I'm no master speaker, and sometimes I may be a little slow with getting to the point or clarifying things, but don't worry, we'll get through it. I'm going to make sure it is very clear, it makes a lot of sense, and this is a really important topic to talk about. So let's get into things. And the first thing to discuss here, I've already said I'm going to be talking about market structure and indicators. So let's start out with, what do I even mean by market structure, and how are we going to talk about the relationship between market structure and the indicators in a specific way? Well, let's get through it. Market structure first. What do I mean by that? Well, market structure, all I'm meaning by that is the formation of either higher lows and higher highs in an uptrend, or the formation of lower lows and lower highs in a downtrend. So that's all I mean by market structure. Very simple. It's going to tell us what the trend is currently. Either we have a lower high and a lower low in a downtrend, or we have a higher low and a higher high in an uptrend. Okay, so this is important to understand. It is a bit subjective, but the formation of market structure, whether it be in an uptrend or a downtrend, you kind of need to be able to spot this. But a great way to help with thinking about market structure is by having an indicator that can also tell you what the market structure is. So specifically, how I want you to use indicators is to think about the reset. So by that, I mean, okay, so we have the indicator. It's in the overbought territory here, quote unquote overbought. It's over 80. And what happens with the indicator compared to what happens on price when we see it come all the way back down into the oversold and then reset all the way back up to the overbought territory? What we need to take a look at is, where was this indicator last time that it was up here in the overbought territory compared to where was price last time this happened on this reset? Price made a lower high here, but the indicator has already fully reset back up to the overbought territory. So we see a full cycle on the indicator. It goes from overbought to oversold and all the way back to overbought, but price, makes a lower high here. So the indicator is telling us price, or the indicator at least, is already ready. It's already reset. It's primed, ready to go down. Price has made a lower high, which tells us that the trend is likely going to be down. We're likely going to see a continuation move to the downside with price and the indicator already being reset and ready for another move in that direction. So we saw that structure break. We got the lower low here and the lower high. Our indicator is already fully reset, which tells us it's ready for that next move to the downside right here. Okay? So this is the first thing that I want to talk about. We're going to go through all the examples here and some more examples. And we're also going to, later on, we're going to talk about something a little bit further in this. So we'll talk a little bit about how hidden divergence plays in with this idea, and also how you can utilize regular divergence as well. But we'll get to those things later. But let's go through these examples again. multiple times. So now over here, we see our indicator fully down at the bottom in the oversold. We see it come all the way to the top, and then we see a full reset down here. What is the relationship between market structure and the indicator at this time? Well, we have the reset indicator, but price is making a much higher low. So what can we expect? The price is going to be ready. It's ready and primed to make that next move. Now, what do we see again? Price pulls back again. We see an impulsive move, corrective movement for a higher low on price. But what's the indicator doing? It's already fully reset down here. So let's go over this again. We see that the indicator comes all the way down. It's fully reset. When was the last time the indicator fully reset? Meaning the indicator went all the way up and all the way back down. That's a full cycle reset on the indicator. Well, you could say it was here, or you could say it was over here. This kind of just ticks it in the oversold territory. So if we're being extra strict here, we have the full reset of the price and indicator here compared to the last time we saw the full reset back here. Price is making a much higher low at this point compared to the last full reset. So what are we looking at? An uptrend. We're looking for this to head to the upside. This tells us what direction we want to be trading in, essentially. So, and it also tells us when price may be ready to make that next move. Okay. Not only that, but we can also talk about the hidden divergence here. So if we're looking here, we're looking at the indicator right here and the indicator right here. Indicator makes a lower low, price makes a higher low. Indicator is already fully reset. This is also a hidden bullish divergence. This gives us that opportunity to look for a long trade here, okay? And it's the same story on the short trades. We take a look at the full resets. As I was showing you here, we see that we get the lower high, even though we already have that full reset on the indicator here, okay? And we can take a look at the next time we get the full reset. So indicator comes all the way down to the oversold territory, gets the full reset right here. We have it up at the top here, and we have it at the top here. So compared to the last time, price is much lower, but at the same time, our indicator is already fully reset. So this could tell us there's potential for another move to the downside. The indicator is ready. The price is ready to potentially continue down. We do get this other move up here, which gives us actually another opportunity. Price, the indicator never resets in between there. And then our next reset occurs here. I'll remove all the drawings. Where's our next reset on the indicator and the price here? So we see it up top here. Full reset comes down into the oversold, comes all the way back up into the overbought. So we get the full reset, and then we just compare those 2 points. Okay, what is this? It's a lower high on price, but at the same time, we just got a full reset. So an indicator comes all the way down to the oversold, all the way back to the up to the overbought. That's a full reset, but we have a lower high on price. So we can look for that continuation move to the downside here. Okay, so hopefully it's making sense so far. I'm not sure how clear I'm being, but we're looking for the relationship between the indicator and the market structure. We're looking for those full resets on the indicator and how it relates to what the market structure is, okay? So we can compare the last time when the indicator was at this spot, what was price doing that? And that's going to tell us very often what the trend is and what direction we should be trading in. Of course, you can't win all your trades, but this can give us an edge in the market that allows us to make money in the long run. Now, a lot of people, they're going to freak out when they lose trades, but the reality of trading is that you have to lose a lot of the time. It's just how trading works. And the best thing you can do is start on a paper trading account, trade for 6 months to a year. Only stop paper trading once you have shown consistent profitability and consistency trading on a paper trading account. Start with a small real money account and build your way up slowly over time with a rules-based system. So utilizing this sort of method, you will see profitability as long as you stick to the system, use a good risk management system, and a good risk to reward ratio on all your trades. As a trend trader, you're not going to have an 80% win rate. It's just not going to happen. Okay. So look for that 50% win rate or in that range using a 1 to 2 risk to reward ratio or better, maybe as low as a 1 to 1.5. But personally, I use a 1 to 2. So, good risk to reward ratio, try to aim to win half of your trades or around half of the time. And you will be able to be profitable as long as you consistently trade in this way. Okay. So we can talk about other factors like hidden divergence. I did mention the hidden divergence that was setting up right here, where we have the indicator going much lower. So lower low on the indicator, but price makes a higher low. That's a hidden divergence. So it tells us the indicator is already fully reset, even though price is making a higher low, which tells us we may be ready for a continuation move. Okay. So, you can see this everywhere. You see this happening everywhere. We get this full reset right here. Where was the last time it was fully reset? Well, it was way up here. I guess you could take a look at it here as well. But this gives us both hidden bearish divergence and that full indicator reset. So we had the full reset. Price was trading up here the last time the indicator was this high in the overbought territory. And now it's already overbought again, but price is much lower. And we had the market structure change. So we, making that much lower high and kind of creating that downtrending structure. Okay. So we're looking at the market structure. We're looking at the relationship between market structure and the indicator and how it's moving, which kind of tells us if price is potentially going to go for another move in that direction. And you can see it happening all the time, everywhere. Obviously we can get into things like multi-time frame analysis, higher time frame trend direction confirmations, all of that stuff. But at the most simple thing that we want to look at is, market structure and its relationship with the indicator, when we can potentially look for, when was the last time the indicator was here in the oversold territory? Where is price now? Is this potentially a lower high looking for a lower low? Okay. So you can think about that. And, as someone who trades with the trend and utilizes both hidden and regular divergence, I think it's probably a good idea to talk a little bit about regular divergence. But ultimately, the most important thing here is going to be this market structure, trading with the trend, looking for higher lows and higher highs, and using that relationship between the indicator and the price action to your advantage to actually stay consistent and profitable with your trading. So I don't have any 200 EMA on here or any exponential moving averages, but those can help you as well. So if we just pop on some, let's just put on an exponential moving average, or we'll put on a few. And this is another kind of method that I want you to think about. And we're going to call it the area of value. Okay. So we actually don't need the stochastic anymore for this section of the video, but this is really important as well. We're going to talk about area of value. So we're going to have, first of all, trend direction as defined by our EMAs. And then we're going to have area of value as defined by our two lower time frame or lower period EMAs. So I've just changed this to have a 200 period exponential moving average and a 20 and a 50. Okay. So we have a 20, 50, and a 200 exponential moving average here. And what we can do is think about this area where the 20 and the 50 stand as our area of value. So when price is in this area, so at the 20, between the 20 and the 50, between the 50 and the 200, we can think about that area as a potential area where the price is ready to continue its main trend. And what is our main trend defined by? Well, we can define our main trend in many different ways, but what I want you to think about is price over the 200 EMA, that's going to be an uptrend. Is price under the 200 EMA, that's going to be a downtrend. And then within that downtrend and that uptrend, we can think about the market structure as well. Is price making a lower high and a lower low, or is it making a higher low and a higher high? So if we take a look at any of these times, any of these trends where we get pullbacks into our area of value, we can see that often the 20 and the 50 act as that area of value where people jump in and, get ready for that continuation of the current trend. And at the same time that we see this type of action where we get the pullback into the 20 or into the 50, we can be looking for things like hidden divergence on the indicator. So we see, okay, look, our indicator is much higher here than it was over here, but at the same time, the price is lower and it's pulled back into our 20 EMA here. So we have an area of value with the hidden bearish divergence. We're looking for that trend continuation, okay? And of course, market structure is always going to be your best friend, using it with the relationship between the market structure and your indicator resetting, and also thinking about our area of value with the 20 and the 50 period exponential moving averages. And often, in a strong trend, you're going to see this area of value just look really, really beautiful, where you get, especially the first couple pullbacks in the trend. Obviously, the longer that the trend continues, the less that this area of value works because the trend is starting to get ready to reverse. But when you get a trend, the first couple resets, the first one, the first two, sometimes the first three resets that you see on the indicator, and the first few pullbacks to the area of value will be extremely reliable opportunities to hop into that trend and capture part of that trending movement. Okay. So, we can see it over and over again here. If we look at any trend, you're going to see hidden bearish divergence. You're going to see it pull back into this area of value at the 20 EMA. And then we get the trend and continuation move. You can see the full reset. We take a look all the way back here the last time that this had pulled back, and it was way up here. So obviously with the full reset already happening, price way down here, we can be looking for another continuation of the trend. And of course, as I was just saying, the first couple times it's going to work the best in the trend, and then obviously you may get a larger pullback, but that's where you start looking to the structure as well for the higher lows and the higher highs, or the lower highs and the lower lows. But just thinking about overall market structure, area of value in the trend, where is price likely to find support or resistance and get ready for a continuation move? Has our indicator given us a hidden divergence? Has it given us a full reset? And there's so many different things that you can think about in combination. And I'm not even going to get into the multi-time frame analysis, going down to a lower time frame for regular divergence, as there's just getting a bit too much. But these are the main concepts that I want people to think about. And I'm just kind of like drawing it out here. All these resets that we see where you can have potential shorting opportunities, even hidden bearish divergence. And just thinking about the market structure, lower highs, lower lows, higher highs. You want to be thinking about this constantly. Okay. So I think that's pretty much it for the video here. Kind of a freestyle, just kind of going through things, reiterating things over and over again. And I'll do it again. We want to be thinking about the resets. We want to think about the hidden divergences. We want to think about price pulling back to an area of value. And we always want to expect that the trend is going to continue. So when I see a move and it's over the 200 EMA, I'm expecting that that trend is going to continue up. I see a move to the downside and I see a correction, I'm expecting that that move is going to continue the trend to the downside, looking for the higher low and the higher high with the expectation it's going to continue, using the indicator to my advantage to add confidence and confluence on that, using the EMAs as an area of value. But yeah, that's going to conclude things here. Hopefully some of you learned something and enjoyed it, but hope you have a great day. Thanks for watching.